Morning, Steve Ray in Chicago with the morning grain comment. It's a very active trade overnight, and we're taking a risk off in a lot of markets. Stock market's down sharply. We've got crude down. Most commodities are lower. You've got the dollar higher, and you have gold and silver sharply higher as money moves into safe haven. I think, first of all, there was a G20 meeting in Saudi Arabia that said the spread of the virus could have an important negative impact on world economic growth. There was also several economists at the meeting that said that the virus is a new economic stress to test China and the world. We also noted that the U.S. dollar is getting close to the 100-point index. The rising dollar is offering some stress on emerging nations that have their debt borrowed based on the U.S. dollar. Also, South Korea reported 70 new cases. China infections is 79,000 with 2,600 deaths. Iran is equipped to handle the coronavirus. It's not equipped to handle the coronavirus with 12 more dead. Also, Afghanistan, Bahrain, Kuwait also reported cases overnight, along with shutting down of the northern regions of Italy. The Chinese top legislators imposed a total ban on the trade of consumption of wild animals, which some people believe may have started the spread of the virus. And Malaysian palm oil futures are sharply lower, concerned about the demand in China for their supply. We also note that last week at the Outlook Conference, the USDA basically lowered the soybean and wheat carryouts, but raised corn. And overnight, beans down 13, wheat's down 9, and corn's down 3 cents. And the question is, do you need a big crop in 2020 in the U.S. to actually see these carryouts go up if demand, especially on the export side, drops because of the spread of the virus? We also noted that last week wheat export sales are running about 4% ahead a year ago, and the USDA is calling for a 7% increase in total exports. Corn is running 16% behind. USDA is talking about a 16% drop after revising down exports in their February numbers. U.S. soybean sales are running 9% behind. USDA is actually continuing to talk about a 4% increase in sales. South America, the weather is diverse. You've got Brazil with ongoing rains. Soybean harvest is about 34% done, lagging the 46% average. But Argentina is dry, and they're going to need a shot of rain in the next couple of weeks as their crops begin to get into the reproductive state. On Friday, managed funds, they sold 7 wheat, 11 corn, 8 beans, 7 meal, and bought 6 oil. We think that the funds are long 50 wheat, short 90 corn, and short almost 100 beans, short almost 80,000 meal, and net long 39,000 soybean oil. The interesting thing about Friday's trade was that open interest in soybeans dropped 31,000 contracts. So again, we'll be watching pretty closely and see if the market can hold here in the grains and or whether we follow the rest of the market lower until this virus spread is contained. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.